So the Federal Reserve has lowered rates by 1% since September. But in that time, mortgage rates have gone up 1%. This is the first time this has ever happened in the history of the United States. So what the heck is going on? Well, here's the deal. The Fed controls short-term rates. These are the rates that you get on your credit card, on business loans, even on home equity lines. Mortgage rates are determined by the long-term bond market. The long-term bond market responds to things very different than the short-term bond market. So the Fed doesn't directly control rates for long-term bonds. And those rates have been going up because of fears of inflation, a stronger than expected job market, and some real life concerns around what the heck is going on with the US deficit. Because of that, traders on the long-term bond market are demanding higher returns to be able to play that game. So while the Fed has lowered rates by 1%, mortgage rates have gone up because of the fact that it is a totally different system that determines our mortgage rates. Now, what's it going to take for rates to come down? Well, it's going to take inflation easing, which we saw a little bit of evidence of this week. It's going to take the job market cracking, which would show that the U.S. economy is not going as strong as possible. And frankly, it's going to take a little bit of luck. With the new administration coming in, their plan to have this deportation scheme, to give deficit-funded tax cuts, and even these possible tariffs, they're all inflationary. But if the U.S. economy breaks, then rates will come down. All right. Next, what's the secret to good credit? It's very simple. Pay your bills on time. Keep your credit card balances low. That's it. Pay your bills on time. Keep your credit card balances low. If you do that, you will have a 99% chance of having great credit. Talk to your clients about it. Make it simple. There's not a ton of ambiguity here. If you pay people back when you borrow money, you'll have great credit. If you don't max out your credit cards, you will have great credit. Mortgage debt, home equity line balances, auto loans, student loans, those don't really factor in. It's those two things we talked about: paying people back on time, keeping your credit card balances low. Finally, if you're like me, you really understand the value of showing up well online. It's part of the reason why I've changed my whole business to being able to provide value for folks that I can't spend time with. I do this with my clients. I try to do this with you, the real estate agent, but showing up online is important. One great way to show up online, because you know everybody Googles you before they call you, is to have testimonials. And what are modern day testimonials? They're Google reviews, they're Yelp reviews, they're Zillow reviews. I have over 900 reviews between those three platforms, and I got them partly by providing, I think, pretty good service, but mainly by asking for reviews. If you've ever worked with me before, you know we donate $250 to a charity of a client's choosing every time they close a loan. And when I send them that request for what charity they want to support, I ask them for a review. When they reply and tell us what charity they want to support, we make that donation. And when we send back the confirmation of the $250 donation, I ask for the review again. You have to ask for these reviews. If you do, I promise you it will help your business, because it gives proof, not promise, proof. That's what people look for in the modern day world. All right? Y'all got this.